Happy 2019. Please give me some okay that you can hear me and that you can see my screen as well, please. Perfecto. So, welcome back. Welcome back. I hope you guys had a wonderful holiday season, holidays festive, and that you refreshed. And I wish you once again an amazing 2019, successful in personal life, of course, in all the personal things, and in trading. And that's what we will aim to do here this year in the academy. I see some new names here, so guys, welcome to our family, and I hope that you will find it useful to your trading. This is a journey. We are not here to make any kind of magics or any kind of easy money like Instagram traders do. We are here to trade for real and talk real trading, real deal every single day. So on 2019, as you know, and if you don't know, you will know now, we did several changes. The first change is the Telegram groups. We now have one group for general talking, another group for trading talking only. All the trading questions, setups, ideas, whatever it is, please direct there so we can have a clear follow-up and answer. And of course, if you just would like to chat about whatever it is, we have a general group for that. Basically what we did is we focus mainly and a lot on the manual trading and manual confirmations, the analysis part, how you verify or how you put an X, right? How you cancel any technical ideas. Because as I always say, first thing to do is to prepare your chart, to prepare your plan. You know what validates your setup, what invalidates your setup, and continue from there. And that's what we will focus to do. So this is the first change. The second change is the live trading rooms. We meet once per day, one time with me, one day with me, one day with Jordan, me, Jordan, and so on. Unless someone has some personal things, and then the other one covers. And the third change is the way that the report will look like. We were thinking during this period how we will simplify that in order not to cause confusions. And the idea we came up with was to, instead of having the whole list of instruments covering, explaining them all, and even when on days that are less relevant, instead of that we will focus on the specific instrument that we find interesting for the day or for the week to follow. That might vary and change from day to day. You would see that, well, I don't have it open now, but you will see that when you get the report, and that happens after the live room, you will have a table. In a table, you have different time frames, and some pairs might have few time frames involved. So, for example, on EuroCAD, we could be, just for example, yeah, we can be long on the 4 hour and 1 hour, and would be sell on daily and weekly. So short-term buys, long-term sells, and it will be much simpler to follow for levels and for plan without confusions, or much less confusions. So I hope you will guys enjoy it. I have, however, one request from you. Once you receive the new report, make me a little favor, drop me a message in Telegram's group or even private, it doesn't matter to me. Your feedback. How do you find a new report and so on? Okay. And thank you for the good wishes. I just see now the chat, and thank you guys for the good wishes for the year. So let's begin. No more long couple of hours Monday sessions because we don't need all the instruments. We go over the hot ones and the ones we find most interesting to follow. Okay. If at any stage you have a question, just please drop it and let me know. So the first one I would like to start with, dollar yen looking for sells. The reason is if we take a look on the weekly chart, our weekly chart still offers last divergence to be bearish. We don't have any clear, obvious cycles here that we can rely on, but we do have the last divergence to be bearish and nothing yet stopping that on the weekly chart. The last divergence on the daily was bearish as well. Since then, we broke to the downside with a bearish convergence. We don't really use it because the range is not really tradable, right? The range is a monster. But the idea is we do get lower highs, lower lows, supporting the structure of bearish pattern. And from here, we drop to the lower time frames, and we are looking to make combinations for sell setups. Sell setups could come from any way here. Two waves retrace, range, which most likely would not be the case because it's not a ranging pattern, right? It's a very, very sharp pattern. We call that V pattern. So we want to see that holding the retrace, recreating the cells, and start making a good sell for us, both short and long term. 4-hour chart starts to develop for us a bearish hidden divergence when we compare these highs. If the 4-hour chart is a bearish hidden divergence, 1-hour chart should suggest a corrective cycle. By the way, for all those of you who are new to these terms I am using, please go step by step over the webinars we have inside the media zone. Okay, the most important webinars you would find in the report. Okay, after this live room, I will start working on the report. You would receive it later. Inside the report, you would find the most recommended webinars at your own convenient time. Please, step by step, watch them, learn them, practice them, master them, ask all the questions you need in the group in order to be able to understand what we are doing, how, and mainly why. Okay, and what we are not doing, also very important. Okay, so that's basically just to make sure we are speaking the same language. So whatever I say, you really understand and not just pretend. Okay, that's my favorite word of my kids right now. Daddy, can you just pretend? So instead of pretending, let's do it for real. So the dollar yen, if it makes a bearish hidden divergence for a possible trend continuation, as we just saw here, we would like to see the 1-hour chart to be a corrective cycle and to support it by a divergence as well. Okay, so 1-hour chart does fit in this category. It could be broken into triple cycle. No, sorry, that's not a good way. Triple descending cycle. It could go and expand it a bit further and bigger. No problem with that. But we do see the slowdown and we do see the bearish divergence supporting the sell plan as well. Okay. So what do we do in such case? We start looking for the sell setups. So the best sell setups and the most conservative ones is when we get the turnaround and we start to create the structure of lower lows and lower highs. When that happens, we can actually go and start looking for the sells, right? The logical combination of lower highs, lower lows and identifies the cell structure, and it fits in. More aggressive or moderate aggressiveness is when we get a false breaks, right? For example, here we start to get false break with the divergence, and then the last available trend line broken down, and we can start looking to sell. And the most aggressive one is actually start looking for sales after false breaks. I like it less in that case, just for the reason that this correction could be here and here and here and here and here. After V patterns, sometimes the corrections tend to be very, very, very annoying and make many false breaks and spikes. In order to avoid getting stopped out on a very short term, time after time, it's best to wait for official call. So instead of calling for a level, use facts. Facts are false breaks and turnarounds by, for example, trend and breakout for moderate view or lower lows for more conservative view. Also keep in mind this trend line. It has a beautiful level anywhere in between 108, well, current level, up to even possibly like a fake breakout towards 109 or 109.50, for example, and then a retrace. It's possible, doable. We are looking for sales. Questions? If there is any questions about this pair, hit me. Wonderful. Next one we have on the list is the Aussie versus the dollar. The craziness that started right with the beginning of this year, and I say craziness because, well, I believe that you saw what happened here out of nowhere, right? At one night, not even during some specific European US session, most active hours, that was brutal. And though, from my point of view, it provides one of the most interesting opportunities for the current time or maybe for the long term, like majority of 2019. Take a look what we face on the monthly chart. This is a special cycle with an attempt to create, and I say attempt because the month is still in creation. We do not know how the month will end. False break is being created right now, live. Bullish divergence is a big hint here, right, for a possible bullish turn around. Weekly support here some kind of a trio with a false break on the last part by itself with this divergence. Monthly attempts to make it bullish, weekly attempts to make it bullish, beautiful hammer, right, with all the short-term stop losses and not so short-term stop losses being taken. This is a good hint that the bulls are here and they might take the control. So for us, Aussie dollar is bullish. Every retrace with bullish evidence, like a bullish divergence, would be a great sign for us. And we can work with that on a 4-hour and 1-hour combos. Look at the 4-hour chart making for us the false break as well and the principle of higher highs. Right? This is alternative trendline false break, bullish divergence, and higher highs to make it convergence. 1-hour chart might build it as a triple cycle, something like that. With some divergence here, right? Very likely we would see that facing some troubles around 0.7170 plus. Very likely we will see there some fight. Bears to try and make some kind of correction before we move on, and can use these retraces as buy opportunity. Michael, is the correct of the first leg good to be called a correction? Not sure I understand what you mean. If the correct of the first leg, weekly, okay, I'm on the weekly. So, you mean if we are on from the weekly cycle, we can expect the daily to be corrective, something like that? In that direction? Yes, definitely. And if the monthly will tick and end as a false break and bullish divergence, we can even expect corrective cycle from the weekly, and that means two waves for the long run, or at least a range fight here, right? As a corrective cycle. Corrective cycle, we always have two options, double wave or a range. That's how corrective cycles go. Beautiful. So OZ dollar, looking for buy retraces. We do expect this area to be fighting zone. Okay, we can see that holding here, making retraces, which we will use for buys. All right, OZ dollar for buys. For all those of you who love the excitement of scalping, this area should provide some scalp opportunities. But for that to happen, you need the 1 hour chart to be the completed cycle, and then on lower time frame, start watching for some false breaks and turnaround, something like that, right? And then lower lows for some kind of correction. That's for the scalpers out of you. For all those of you just prefer the less nervous trading, just wait for the pullback, confirm it with the bullish signs, and attack it for buys, further buys. That's for the Aussie dollar. The next one on the list is dollar Canadian. Now this one I don't really have any kind of technical setup to trade here. It's more like an update for investment. We attacked previous week, I think it was Thursday, I think. What we did is the attack, once we got the break of the slow, we went in investment. That was 135.70, right? 135.70. The reason here is very simple. Weekly triple cycle, bearish divergence on the whole move, daily supporting it by itself, and of course the 4 hour chart ending here at 3.0 by itself. 1, 2, 3. And from this moment we were facing false breaks, bearish divergence, right? Fake breakouts, fake highs, even here. And from this moment we basically got this. The breakout, 1, 2 lows in a row. And that's pretty much the whole reason. Now we are bearish. We do not have yet any signs against. Well, it potentially looks like creating a bullish hidden divergence on a daily chart. But for that to be relevant, 4 hour has to be a divergence by itself. 4 hour does not offer a divergence yet, and therefore we are still bearish. So can we really expect a short-term trading or anything like that? Too risky. We could, We could get the 1 hour chart. This possibly be a special cycle by itself, right? Little pullbacks and sell continuation. But I wouldn't really work here on any buys. I would be looking for sells on any possible sells if we do have retrace. However, it's really uncertain. Therefore, the expectations wouldn't remain bearish. Can we expect a pullback, Willem? As I said, if happens, good. I wouldn't bet on that. I wouldn't trade it for sure. Never trade against weekly and daily, as you know. Before we get official signs, and we don't have any signs, not false breaks, not higher highs, not completed cycles. So to try and to bet where it will happen is shooting in the dark. Maybe you will hate it, maybe you will miss big time. Okay. That's pretty much all for dollar CAD. We are holding our investment and we are going. As for now, the target is 131. We would be with our finger on the hit button and we will see how it goes. We have the 38.2 offering us slightly below 131, but we don't want to be greedy. And of course, more importantly is the 50% level. So we would see how that goes. There is a very good healthy chance that this is a triple cycle that we might be facing here, something like that. So we would see how and when it develops on the next several days. The most important thing as for now, when you have yourself a nice winner running, is not to lose the profit. We do have the stop loss and break even, meaning free risk, and that's all, right? No risk taken, and we'll follow easily to see how it develops. The best part, we earn the whole move. Worst part, we don't earn. If for whatever the reason on ours, it flies back all the way up. Could happen, you know. In trading, everything could happen, right? So we always, when we can protect our profits, which we should, in order to avoid randomness. Keep in mind, Canada is expected to hike the rates this week. That's one of the contributions, of course, to what's going on right now with the CAD. Okay. Well, Willem, we all want to book at the bottom, then re-enter on the retrace. Not always it's possible, right? If your positions, for all those of you who are dealing with investments, if your positions allow partial cash outs, that's the best thing. For example, I don't know, if you have like, I don't know, 0.2, just for example, or 0.5 or 0.1, whatever, right? Then cash out 50%, 60%, let the rest freedomly run all the way to the weekly target 50%, and that's all. And you have your money in the pocket, free of worries. Of course, both is acceptable, right? At the end of the day, at trading, the most important thing is not to be right, but cash it. So next one on the list I have is pound versus the dollar buys. What do we have on this pair? First of all, Brexit. The craziness of Brexit, right? Next week, May is expected to try and run the vote again in the parliament, or all related to Brexit. You know, 1 week of quiet could be followed with 1 week of craziness. All related to the pound. We don't know, and we won't know until officially Brexit day comes. It should be later this year. Until then, everything would be under rumors. However, we treat that currently based on facts. We trade it, right? We trade only on facts. The fact is, we had a double cycle, therefore, with a bullish divergence on the long term. We expect a correction. This offers us 155. 38.2 is the target we expect after the double cycle. So as long as this low holds, basically for us it's buys. That's for the very, very long term, right? Now, based on the weekly, we had a special cycle to the upside. We can, of course, break it into triple as well. And we had a double cycle correction, which is creating for us a beautiful scenario of a bullish divergence as well, and a bullish pressure. Therefore, the daily is expected to be corrective cycle, and not just that, but daily is also a cycle by itself with a false break and divergence. 1 plus 1 tends to be 2. That's what we've been taught in our schools. All the higher time frames support here a bullish run. Therefore, pound dollar is expected to be bullish. We currently have a bend to bend movement in the pound dollar. Based on the Bollinger techniques, when we get out of this zone, we can be exposed to short-term pullbacks back to the middle or the opposite side of the Bollingers. Once this short-term retrace happens, with a bullish evidences, it's smart to start looking for the buys. If 4-hour chart makes the first leg, the 1-hour chart is supposed to be a cycle by itself, which you can clearly see is the case. This should be the third push, last push on this rally. From this area, we very likely would be exposed to pull back in 2 waves or a range and looking for further buys as a following. Pound dollar buy retraces is the plan. Any questions here, guys? Do you see the flow we do from the higher to the lower time frames, guys? Very simple. If weekly is the cycle we work with, just for example, we expect a correction on a daily to be corrective cycle. So we draw the lines. If daily is to be something like that, just again for example, okay? Of course, it can develop it differently, but this is what we draw just to have a brief idea what we follow. Then on the 4-hour chart, this is what we officially follow, right? 4-hour to be cycle, corrective to be cycle, and then further. So this is the leg we're dealing with. It has to be cycle. It could be found on the 1-hour. It could be found on the 4-hour. On the 4-hour, we don't have anything clear here. On 1-hour, we did, right? And this is our zone of the spikes: spike 1, spike 2, spike 3. That's where the stop losses are located for all those who are selling. Once the stop losses are cleared, it's a beautiful time for pullbacks. That's how it works, right? That's why I'm saying if we follow that, after that, this is the corrective leg we should be following, and then further buys. This is our plan for the pound dollar. So you draw the lines and you follow them, right? This is what we should see, be able to see. From here, follow that. And each of these lines that you draw on a daily cycle should be a valuable cycle on the lower time frames, right? Have that in mind, guys, and follow that. Muhammad, pound dollar, is it showing cup and handle? Well, cup and handle. Cup and handle. I assume you're related to this, or I'm not a big pattern trading master. It's less my zone. I'm sorry. We have Peter, who is a master in patterns in the telegrams. Well, the only cup and handle I see is the coffee I see in front of me. Turkish coffee with cardamom, beautiful. Sorry, it's really not my style. Sorry. I'm not. I don't know. Maybe I'm missing something. All right. Next, Aussie versus Chakra, you are very welcome. Actually, I love it. It's like I don't know. It's in some places it's called Arabic coffee, in some Turkish coffee. I love it. Black coffee with cardamom, cooked to perfection with stevia as a sweetener. Rock on. All right, next one. Ozy Kiwi, the pair I love, as you know, and a pair I consider as a monster investment for a long term. Okay, so what do we have here? Isaac, thank you. Bella, oh, is really Indian tea is the same? Never knew that. Live a life, always learn something new. Thank you. So what do we have? We have a special cycle on a monthly chart, meaning we are now in a corrective phase. Corrective phase means we expect two-wave correction to the upside or a range. We had false break in 2015, which was also a false break further on in 2015, and since then we are inside an acceptable range, and we can still get two waves correction. We got this monster drop spiking pretty much to the same zone, to the same level, kissing the area of the parity, and a beautiful, powerful bounce. Buys for long term as well. That's for the based on the monthly. Weekly supports that assumption with a double cycle and with this divergence. Hold on, let's make sure that I'm not missing the. Do we have divergence here? With two candles not in play. Yep, we do. Just to make sure I'm not wrong. Yep, we do. And the daily chart also fits us perfectly with its cycle by itself. Kind of a brutal ending to this cycle, but again, you know, trading is not really an art of drawing, right? Sometimes the moves are beautiful, sometimes they are brutal. Who we are to judge, right? This is Mr. Market. It's no better how it will work. The fact is we have a clearance with the spike, we have false breaks, and we have divergences from the higher time frames supported by the cycle. Assuming this cycle is the last one we have, this is the target on the short term, 106. Starting from this level, we would expect short-term pullbacks and then continuation inside a weekly cycle. Now, ironically or not, the 38.2 of the double cycle was cleaned already, and that brings us back in the range. This is the range we are dealing with. Our further long-term target would be here again. Now, this is for long term. On the short term, as I already showed you, we draw the line. So what we want to see is higher highs. If and when we get them, this is a beautiful turnaround sign. From there, pullbacks and further buys. Now, if that's the plan for the long term, short term should be corrective cycles. As you can see on 4 hour, we will not see that because of the spike. 1 hour is what we face right now. So this is what we want to see. Triple cycle, double wave correction or a range, and we are back to bullish. Okay, so once again, this is our clearance area. As you remember, the approximately 106, right? That's the spikes we should clean. Clearing here, catching some stop losses, maybe slightly higher, making the short-term pull back and following our buys. So Ozy Kiwi retraces and bullish. Are the short-term retraces here tradable? Yes. Once again, it would be riskier. Why? Because we are against the higher time frame. Now, for all those of you who love to the art of scalping, then this is the cycle we are drawing, right? Because we are dealing here on the 1 hour, then 1 hour is the cycle, and that's what you would want to remember. Each of the 1 hour chart legs would have to be a cycle by itself on the lower time frames. First leg, cycle with bearish divergence. Second leg from the 1 hour with a divergence. Third one, still not. So ideally, it should end up with some divergence. And once it does, that's your short-term retraces probabilities. Make sense, guys? Remember, it's always the flow of the cycles. From higher to lower, the rules are the same. When each of the legs support you in your bigger picture, it's tradable. As long as it's not supporting you, it's not tradable. Very simple. So hold your horses when you don't get a clear picture. Don't get fooled by Mr. Market, right? And Mr. Market knows to make us look like fools sometimes, right? Good. So this is the OZ Kiwi. Any questions here, guys? Next one on the list is the Kiwi. Now I have the 3 CAD pairs coming here. So if you have any questions, please hit me now, guys. If not, I'll continue. Beautiful. Did I scare the guys that recently joined, guys? Did I scare you enough, or still not? I was trying my best. If you are scared, that means my my mission completed. No, not. Oh no, Patrick. So I'm gonna scare you now. Just joking, of course. Just joking. All right, guys. So let's continue. We move on. Kiwi versus. I'm just joking, guys. Of course, I'm not here to scare. Just to make it helpful and clear. That's the whole idea. Kiwi cat. We are bearish. Why? First of all, the triple cycle. Thank you very much, Ray. First of all, thank you. The long term triple cycle. We expect a correction, 1, 2, or a range. Meaning we are heading the 50% of this craziness. 080 could be our final destination target. So what do we have here at this stage? Monthly suggests a sell. Weekly suggests triple cycle, which means corrective cycle to follow. Corrective cycle could be 2 waves or could be a range. That means there is a good chance we are still to face something like that or some kind of range movement for longer period. So we have to be careful with the long term yet in terms of cycles. On the shorter view, weekly is bend to bend movement, classical 1 to second bend. Now, bend to bend is basically, it's coming from the Divergence University course. The idea is one move straight to the opposite bend with some kind of deviation, acceptable deviation, followed up by a bearish hidden divergence, possibly hints for a trend continuation. We still keep the structure of lower highs, we still keep the structure of lower lows. Daily chart has to fit in as a cycle here, and it does. 1, 2, 3. Bearish divergence in play, both histogram and moving averages. We are in a sell. The corrective cycle should be able to take us towards 50% or at least the 38.2. As for now, we don't have the real signs against bearish, possibly bullish hidden divergence to make some short-term issues for that, possibly. But then the 4-hour has to support. 4-hour has nothing against. Therefore, Kiwi CAD is bearish. Once we start to get our bullish divergences forming, both for hour and the daily, it would be time to give up on that pair for some time. We might be facing some kind of movement like that here, then some possible both directions continuation. So we don't want to force here. We would be waiting for clear signs. As for now, short term, we are still bearish, looking for the sell setups. Now, very important thing, guys, especially for all those of you who are here new, when I say we are bullish or bearish, it does not mean buy or sell at whatever the price is. It's not any signal or anything like that. That means based on the techniques, systems, strategies, robots, whatever you use, that's the more that's the better and smarter direction to look to trade. And when I say better and smarter, I mean with better odds to be right. There is no such thing guarantee or warranty or anything like that in trading. Trading is a business of statistics. And we, in order to improve the statistics, want to be able to start our positions at the best starting point. And that's what we are doing with the cycles and divergences. Okay, improving the starting point of our positions. Remember that, very important, because sometimes, especially when you're new to trading, it's like, oh, so we are bullish, let's buy. Oh, are we are bearish, let's sell. No. Okay, no, wait for the setups with the techniques you use, or any techniques we use, which we teach here. Barbara, that looks like a pretty head and shoulders pattern forming on the daily. Oh, this one you mean? Actually, could be a very interesting thing to follow, right? If this is the one you mean? Something like that? Yep, 100% agree. We still need the shoulder to be done, right? We still wanted to cross that, clean that, clear that, clarify, verify all the 5 things and make it fly. Well, to the downside, of course. Good. So Kiwi Cat was the first one. Then we have the Cat Franc, also on a hot list. Long-term reminder, triple cycle from monthly chart means we are after massive buys. Based on the weekly, we have a double cycle, 1 and 2. Bullish divergence comes in play, and the daily chart supports that exactly with its 1, 2, 3 double correction on the 4-hour with its assumption. Of course, we can also break it like this, right? The ending divergence is on all the time frames, and the 4-hour chart hits it as a false break and higher highs. Right now, what we are building is a triple cycle. One more push. This is the clearance zone 1 and 2. This is a classical clearance. That's the bigger view clearance. One of them should be cleaned, or both of them might be cleaned. Provide pullbacks. Corrective cycle are always 2 waves or a range, and buy from there. Cat Franc is bullish. Short-term sales are available from this area. How do we verify the short-term sales? As always, if this is a cycle we have, each of them has to be cycled by itself on the lower time frames. Once you can build it as a cycle, then you can actually go and trade it. So this is a triple, which is seen on 4-hour and 1-hour. Go to 15, and if you can make each of its legs a cycle, and current one is still not a cycle, so it's still forming, right? And this is why we want to see that making something like that, some slowdown, some divergence, which would accept short-term sells and buys again. All right, that's our plan for the CAD franc, and the mirror to that is the euro versus the CAD. Now again, you see we have several CAD pairs. It does not mean you need to find yourself exposing to all of them. No, you don't. Choose the best one that serves you well, with setups based on the systems and strategies you use, giving you the best risk reward, and mainly those who do not have obstacles and signs against you. So what do we have on the euro versus the CAD? Triple cycle from the monthly chart, false break, bearish divergence is the last divergence in play. Weekly was a triple cycle to the upside, meaning the daily has to be the corrective cycle. Daily was a corrective cycle. Well, it did not really end with a classical, beautiful divergence, only on this slowing part here, but it does has the structure. Again, not always it's as good as we would like it to be. We do have the stoppage of this area. It also could be treated as a false break, false break, false break, a ranging corrective. And if it's a ranging corrective, we do not have divergences inside ranges. Divergences is only at the end of trends. And therefore, we are back to the bearish plan. And invalidation to all that is the last high, of course. As long as we are below, we are looking for sells. 4 hour and 1 hour, basically a mirror to what we saw on the CAD franc, would be treated as a triple cycle. We have a clearance zone at that place. There is little one here. So we should clean that. This area should provide with this divergence to form little pullbacks, which we would want to go and sell later on. Okay, so our plan for the Euro CAD, sell the rallies. Rallies would be tradable on the short term once each of the 4 hour chart legs would turn to be a cycle by itself on the lower time frames. Once you can break it, and again, it's a 4 hour and 1 hour triple cycle, same cycle on both. Therefore, each of its legs will have to be on lower time frame, which is 15. Once you have that, you can trade it. Therefore, if this becomes a cycle with divergence, right, false breaks and higher highs, that's where the short-term buys could be tradable before the future sells. Make sense, guys? This is the flow of the things as we have. What do we do if we don't get it? Simple, not trade it. We focus on the ones that give us the conditions we want. And that's the beautiful part by creating things in advance. You know what you want to see. If you do see that, you know how you treat it. If you don't, get what you expect. Don't force the market into what you need. Trade it if you get what you want or what you need. If you don't, it's a hint from the market, avoid. Right? It's like, when you go to the supermarket and you say, if there will be some fresh coconut, I buy it. You come to the supermarket, it's not there. Will you drive 1 hour or 2 hours different supermarket just because you wanted the fresh coconut here? Got the idea, right? Maybe it's if you really want badly this coconut, you will drive, but this is pretty much the metaphor. You got my point, right, guys? Daniel, what is the EMA? This one, the red one, 200. That's 200. Okay, good. So we are done with the forex pairs. That's the most interesting ones as for today. What I managed to find and the focus on. I think this is where the opportunities are lying down. Commodities, gold and silver. Gold is having a bullish hidden divergence on a monthly chart after higher highs That might be a massive buy opportunity for the long run. Daily, however, has a bearish hidden divergence after false breaks and convergence by itself. Well, I like it less because it's not absolute convergence, only short term, and that's where the confusions come from basically. So we never got lower lows and lower highs here. We're still stuck inside this ranging pattern. So on the short term, with this divergence, we could see some pullbacks, but later on the monthly chart should be under control. Now, previous year, I was looking for sells as long as this double cycle was holding. What happened since, during the end of the year and the beginning of this year, we got the break of this high, making it irrelevant for sell continuation, because we are selling continuation as long as the ABCD pattern holds. Since then, we have higher highs and higher lows only. Game is over. We are bullish. Short-term pullbacks are acceptable, as we have here triple ascending cycle, which you would see on the 4-hour chart here. 1, 2, 3. Each of them is a triple cycle or special cycle here, which is a beautiful combo. Short-term pullbacks down are acceptable. We are looking to sell them. Keep in mind, it might make an attempt for one more fake high. That's acceptable, of course. Short-term retraces down are acceptable, are tradable. Daily has a 20 candles right on the Bollingers, as you can see, marked with this band, right? You also have it here. You see in the past what happens normally when you have 20 candles right. So a slowdown area is expected around the 13,000. We can still try to push a bit higher, but most likely it will be fake highs if happen. So what we want to see is retrace down, bullish hidden divergence to form, or any other bullish sign like two-wave retrace, and further long-term buys. So goal, short-term sells are acceptable from the zone of surrounding the 13,000 up to 1310, which is this clearance area. Retraces down and buys. Silver, same idea. Weekly ticked a false break and a bullish divergence. Daily created convergence, making it higher highs. No opposite signs. We expect this. What could happen is a special cycle to form here, clear this area, make a deeper correction, and fly further. So basically double wave from the weekly. 1, 2. This or other way around, we are bullish here. Look to buy retraces. Okay? And indices, well, not for today, simply because I am waiting for some clearance. Here, the idea is simple. What we expect here is a double wave correction. Each of the correction has to be cycled by itself. First one was a cycle. Now this one has to become a cycle. This is a clear area. And from there, here or maybe even here, we would be looking for the next portion for sells. Same with the German DAX. Weekly double cycle, bullish divergence, daily to be corrective. So we expect this. And a sell off. Okay? That's all. Any questions, guys? Silver show flag. Let's take a look. Silver shows flag. Oh, flag. You mean this one, maybe? Right? Or Well, too early for that, as we don't really have new low. If we get it, it would be perfect. I totally agree with you. If we get this, it's a beautiful push out. Oil isn't clear to me, so that's why I didn't cover that. As I said at the beginning of this session, guys, we transfer the live rooms into new format a bit. We changed it. We focus on the most relevant thing as we see for the day or the days of the week. Not all the instruments like it used to be, so we don't have the confusion and you don't waste your time when it's not clear. If it's clear for you with your setups, you are welcome to trade it. But what's not clear to me or us will not be shared. Okay, so that's pretty much the idea. All right, guys. So once again, thank you very much for being here. I wish you a wonderful trading week. Tomorrow is Jordan is with you. I hope that the new names here, as I said, guys, welcome to our family. I hope to be very helpful and beneficial to your trading. Great to see you with us. I'll see you again on Wednesday. Thank you very much for being here, guys. Good trading, and I'll see you in the telegrams later. Wait for the report. It will be sent a bit later. Okay, enjoy your day. Thank you very much, guys. Ciao for now.